Hi everyone, Andy here. Welcome to the Crypto Wealth Cafe, brought to you, of course, by Dacxi, powering serious crypto wealth for serious crypto wealth investors. So as always, this is our weekly look to see what is happening in the crypto markets, just at a high level, a macro level. We'll go through the wonderful world of crypto Twitter and see what is going on. So strap in, pour yourself a nice cup of whatever coffee or hot beverage you like, and enjoy your time here at the Crypto Wealth Cafe. We'll just be 20 minutes or so looking through the markets. Here we are, starting off, of course, with the Bitcoin chart. And, well, you can see a little bit's happened since last week. So, of course, we've just been in this downtrend really since hitting that all-time high back in November. Since then, it has really just been doom and gloom down a descending channel. Now, we did sort of bounce off the bottom of this channel a week or so ago, almost 2 weeks ago now, and just slight upward trend since then. Will that hold? I don't know. I mean, there's pretty heavy resistance around 40k, so we'll just have to see how this plays out. But you can see we're down a little bit again just today. But of course, as we like to say here on the Crypto Wealth Cafe, and certainly it's a key message from Dacxi. When we look at this is short-term stuff, right? So I think if you're a serious crypto wealth investor, you want to be here for the long term. And for me, a long-term time horizon is 5 years, 10 years even. And I think as we've seen from Bitcoin's price performance in the past, on a 10-year time horizon, things are always extremely positive. So the key message here is, don't get too scared about the short-term volatility, especially if you're in it for the long term with a long-term wealth, a growth, long-term investor mindset. With that said, let's have a little bit of a look at what we think is happening. So Dave the Wave, he's a Kiwi guy. He's a friend of mine actually, and he's a really good TA guy. He's a very good technical analyst. So I'm just going to use this chart that Dave put on Twitter just to kind of more illustrate what we're talking about. So, we talk about the downward descending channel. So Dave has charted out this downward descending channel. You can see we bounced off the bottom of that, and this is we talked about the resistance at 40k, so that is here. So if we get up, if we can break that 40k and come out of the descending channel, well, that's a good thing. We could be more upside predicted potentially after that. But if we hit that resistance and just stay in the descending channel, then potentially there's more downside ahead. I've talked to Dave a bit about this. He even likes if we do keep going down, I think it could go as low as 25k US, I think, which would be somewhere around here, just sort of at the top of the long-term buy channel, which I talked a bit about last week. But I think, the point is, if you're a long-term investor, anything down here is going to be a good buy in the long term. I don't know. I mean, are you averaging in? Are you dollar cost averaging? That's a decision for you. But not too bad an entry point going forward, I think, which is a point that Ari Paul makes here. So Ari Paul, I think he's the founder of Block Tower Capital. Ari was one of the first traditional finance guys to enter into crypto in a big way back in 2017, and he's one of the kind of smartest investor minds on crypto, I think. So he says, my current best model on crypto markets is we're around 4 to 12 months into a relatively mild winter or bear market. So does that make sense? It kind of does make sense to me. Already 4 to 12 months into a mild bear market. So he says that retail inflows probably peaked at the beginning of last year, and since then, kind of gone sideways, slightly down. So we didn't get the extension to new all-time highs or that kind of blow-off top that people were looking for in Q4 2021. And the reason for that, of course, is the macro tightening in the macro markets and the move away from global risk assets. So He says, I don't have too much to offer as a forward-looking statement, except that I would suggest everything at the moment. This is kind of a middle-of-the-road entry point. It's not an ideal bottom of the bear market entry point, but it's not a dangerous FOMO by the top point either. So he makes the point again, if equities tank, crypto will go down a lot as well. But at the same time, even if we have a ranging market, a lot of cash was raised by crypto institutions and projects in Q4. So that does a couple of things. It gives a floor to prices, even if that floor might be a little bit below where we are now. And the other thing, of course, is all those projects and VCs, the funds, they're flush with cash, so they have a lot of runway to keep building, even if we are in a sideways market or a bear market. So, finishing off, Ari says, in my opinion, this is a good time to be cautiously shopping for long-term value and likely a great environment for asset selection and a rotation. But, for the long-term investor, I guess he's saying not a bad place to buy, especially on the long term. And, even if we are, say, 3 to 12 months into a bear market, that's a good thing, because after the bear market, there's a bull market. How much longer is this kind of sideways bear market? Well, that's the big question. But what's different from, at the moment compared to past crypto bear markets, which have been pretty extreme? If you've been around for a while, they get pretty depressing. They shake people out, and it's not a lot of fun. At the moment, things are a bit different just because crypto is starting to mature. There's lots more happening. There's just we're much further along the mainstream adoption cycle, and this is what Travis Kling, who's also another legacy guy, now deep into crypto, very smart thinker. So even though crypto prices were down in January and we could be in this kind of mild winter, you wouldn't know it looking at what is going on. And even with depressed prices, crypto continues to be the hottest sector on earth. So don't worry, I'm not going to read out every bullet point on here, but you can just see these are just kind of headlines from the crypto markets just in January of this year. Let's pull out a couple. So Bill Miller, another legacy guy, he holds 50% of his net worth in Bitcoin. I mean, you just wouldn't hear headlines like this even 3 years ago, but now you do. FTX Global Exchange, they've raised a $2 billion venture fund. NFT platform Autograph raised $170 million from Andreessen Horowitz, etc. Solana NFT platform has raised $46 million. Apple CEO Tim Cook sees a lot of potential in the metaverse, and Apple is investing accordingly. Nike is hiring a director of a metaverse. Cash App is beginning to offer Lightning Network to access to users. Google hires former PayPal executive to run payments division and pushing into crypto. Twitter are now allowing users to display their NFTs. Look, it just goes on and on and on. And as I say, this is just in February. Mayor of Rio de Janeiro moves 1% of city treasury into Bitcoin. I mean, yeah, lots going on, right? I also just wanted to point out this. This is from Glassnode. Glassnode are a great outfit offering really good on-chain analysis, right? So here they show the number of Bitcoin addresses with a non-zero balance. And we can see that this kind of reached a peak here around May last year with that first Bitcoin all-time high, and then there was a little bit of sell-off. That's what happens when long-term holders they sell off some of their position. They take profits when Bitcoin hits a new extreme all-time high. You can see they did that back in December 2017, January 2018 here as well. So, of course, same thing happens here. But, after that sell-off, it's just kept on going. So now we're actually at a new all-time high. 40.16 million addresses holding, some amount of Bitcoin. So that's a lot of addresses, and you can see that that's just going up. And also, if I just go down here, you can see this is reflected as well in kind of long-term holder behavior. So this shows the position of Bitcoin on exchanges as the price fluctuates. So, as the price goes up, you see significant inflows as the price hits high and then it starts coming down, you see all these people suddenly depositing their coins back onto the exchange because they want to sell, they want to take profit, capitalize on those high prices before they fall down so far. But now what you can see, we're getting is there a supply shock looming? That's kind of what this is showing. So you can see again, we're now in the supply is going out of exchanges as long-term holders. They just they do what they do. They're long-term holding. They're looking at the price on a long-term time horizon, and they are accumulating. So that's always good to keep in mind. It just shows the confidence of people who have been in the market for a long time. They've seen this price action before. They're not going to be too scared or shaken out, and just keep quietly, slowly but surely adding to their position. And this is, of course, I tell you who's doing exactly that. Speaking of quietly adding to your Bitcoin position, well, Michael Saylor is doing just that. I would probably say that he's not doing it too quietly. He's doing it quite loudly. In fact, he's always very keen to announce. And so he did this just this week. When was this? This was on the 2nd of February. Michael Saylor announced that MicroStrategy has purchased an additional 660 Bitcoins for another 25 million at an average price of 37k per Bitcoin. So, I mean, I say this all the time, but just can I say the balls of steel on this guy? I hope you don't mind if I say that, Dacxi listeners, but man, it's just the sheer amount of conviction that Michael Saylor has. He's one of the biggest Bitcoin holders in the world on behalf of MicroStrategy, and just keeps doubling down and adding to that position. So incredible display of conviction. So I think this is going to be history-making stuff once Bitcoin goes back into exponential price appreciation mode. Michael Saylor will turn out to be one of the smarter guys on the planet if that comes to pass, of course. Now, Michael Saylor at MicroStrategy, they also had a big conference, Bitcoin for Institutions. They did one last year. They did another one a couple of days ago. And, you look it up on YouTube if you're interested in looking at some of those presentations. Michael, he talks to Lynn Aldrin. She's a great analyst. Also, Jack Dorsey from Twitter. A number of other people. Worth watching if you're interested. But one of the key takeaways is, Coinbase institutional chief Brett Talapulan, he said that institutions now make up about 50% of the company's business, growing from roughly 10% just 3 years ago. So, quite incredible. That just shows, it's just a headline, but it just shows the growth in the market and what is happening. So just, extrapolate it out again. What do you think is going to happen in another 3 years? I think, this is, we're crossing the chasm here, guys, and, we're at the bottom of the S-curve. So David Marcus, this is an interesting point. If you don't know who David Marcus is, he was the guy that was, for a long time, he was heading up Facebook's Libra project, the Libra stablecoin project, and the DM and the Novi wallet and all that stuff, which, to be fair, kind of went sideways and didn't really come to pass for a number of reasons, regulatory reasons, really. But what I did think was interesting is that David Marcus says, now, it has become clear to me that Bitcoin will be the one asset and layer one blockchain still around in 20 years with increased compounding relevance over time. The number 2 slot for a different use case, which is, a smart contract platform, is still to be decided. Ethereum is in the lead now, but, Solana, Avalanche, Cardano, there's a lot of other competitors to Ethereum. But I think it's just worth understanding what he means. Bitcoin is truly leadership truly leaderless in a good way, censorship resistant, and has extremely strong network effects. And its unique, compelling use case as censorship resistant digital gold. There's no competition in that space. So I think that's just worth thinking about that. So if I read between the lines there, I think, if that's Bitcoin is the one asset that will still be around in 20 years' time, we can confidently say that about Bitcoin. It's a bit harder to say that about any other crypto asset, just in my opinion. So, what that means as a long-term investor is don't put all your money in, Dogecoin or something like that. You gotta, if you want to have a bit of money in Dogecoin, that's fine. Elon Musk likes Dogecoin, that's fine. I do have a little bit of Dogecoin myself, but the point I'm making is, you make your own decisions, but in my opinion, you want to have some Bitcoin because Bitcoin is the safe bet in crypto. Tell you who else thinks that is Fidelity digital assets. So they've put out a report that they say in their latest piece, they argue that Bitcoin's first technological breakthrough wasn't as a superior payment technology, but as a superior form of money. So this is the report. I'm not going to go through it because it's quite text heavy. There's a few nice charts and graphs, but as you can see, it's text heavy. But I suppose the point they're making is, Bitcoin is number one. It's different from other use cases, and Bitcoin has kind of won that store of value, digital gold use case. And Bitcoin, as a result, should be considered separately from the rest of the crypto asset market. And on the long term, I think it's probably a good idea to have a little bit of Bitcoin in your portfolio. They say we believe Bitcoin is best understood as a monetary good. That is kind of, Bitcoin is now competing with other fiat currencies, with gold. It's in that geopolitical sphere now, and Bitcoin has the potential, in fact, to be the primary monetary good over the next 10 years, 20 years perhaps, and they make a good argument about how monetary networks are extremely powerful. The Lindy effect of Bitcoin, which simply means, the Lindy effect just means the longer something is in existence, the more kind of power and belief comes into that good or brand as more people accept that it has been around. And that's certainly very strong with Bitcoin. So as I say, not going through it all, it is here. Let's see, do they have a nice conclusion? Sort of, but I'll let you read it for yourself. So, if you are interested, just search out, go to Fidelity Digital Assets, or just search out that report with a read. So let's just go back. All right, what else is happening? Well, surprisingly, India are the latest large nation state to kind of do a little bit of a flip-flop on crypto. And now it appears that India is actually going to legalize crypto assets after all. So, you will be aware of the 10 or 20 times that China have banned Bitcoin or crypto. India a little bit as well, not quite to the same, not quite on the same scale as China, but India have been quite negative about crypto as well. But that seems to be turning around just a little bit. So Balaji Srinivasan, who is Indian himself, ex-CTO at Coinbase, very smart guy. So Balaji has been kind of following this and actually campaigning to behind the scenes, I think, to help achieve this outcome. And he had quite an interesting Twitter thread here where he talks about this being, bigger than just crypto. And the point he's making is that, India is one of these nations that are kind of on an upward trajectory at the moment, whereas the US, Balaji would argue, is perhaps on a downward trajectory. So, I won't go too much into what he means by there. It's slightly outside of the scope of this, but thought this was interesting as well. So Deloitte say that 82% of Indians surveyed plan to invest in a Bitcoin and crypto. So look, I don't know anything about the scale of this survey or how accurate it should be, but of course, that's interesting because you're probably aware of, in Indian culture, the importance of gold is extremely strong and goes back hundreds and hundreds, if not thousands and thousands of years. Gold is very much a traditional wedding gift, and people like to, they like to store their wealth in gold, all that stuff. So, it just makes sense that as the younger generations come up in India, there's going to be a transition for not all of them, but a lot of them are going to see Bitcoin as digital gold and crypto assets as well. And so, it's just have to wait and see, but that would be an interesting trend in India. Someone had a go at Balaji. They said, going back to this idea of India being an ascending nation and perhaps the US being a descending nation. You don't have to agree with it, but someone said to Balaji, well, how many US citizens defecate outside on the ground, though? And Balaji being Balaji, he said, unfortunately, quite a few. So, you can see this is map of San Francisco, and someone's overlaid, what do you call this? Locations of interest where someone has defecated on the ground. I don't know who's tracking this, but it is a thing. And look, you probably heard that, San Francisco has famously a little bit strange at the moment. And Balaji, he's a smart guy. He'll always have data to back up his arguments. And he says, this is actually one of those insane areas where India's trend line is opposite of America. So people can argue about whether open defecation has been eliminated in India. Probably hasn't, but it is trending down, whereas the opposite is happening in American cities like San Fran. So here we can see people practicing open defecation in India. It's trending down. Whereas in San Francisco, it's trending up. Simple as that. All right, let's move on. We better not talk about this subject too much longer. This is interesting. This is just a chart of what's happening with mining. So it's kind of almost flipped, which is incredible to see. So the pink is, or the red is Bitcoin fees, and the green is Ethereum fees, and that is basically flipped. And you can interpret this in a number of different ways. So people used to criticize Bitcoin because, it used to be you have to pay a lot of money, $20, $50, $100 to get a transaction through on the Bitcoin blockchain. Whereas now it is very, very cheap to use Bitcoin, to send Bitcoin. And of course the opposite has happened on Ethereum. At the moment, if you want to mint an NFT or just send some Ethereum, it's going to cost you gas, anything from $50 to $100 maybe, just in gas alone. So it has priced a lot of people out of Ethereum, but of course the reason for the high fees on Ethereum is simply the number of people that are competing for space in the blocks because they're using Ethereum, right? NFTs, DeFi. So it's just interesting. You can see this is a good way of showing it, or another way of showing it. This is Google search volume for NFTs, which just kind of, we thought it was up at the beginning of last year, but man, a year later, just astronomical growth in NFTs at the moment. And that's why, so Travis says, don't get too caught up in short-term price action because, I think we mentioned this at the beginning of the show, Apple CEO looking at Metaverse, investing accordingly. Nike is hiring a Metaverse director, NFTs going exponential. So Web3 is happening, and of course that is why, chains like Ethereum are going to be used, and also, of course, that's great because Bitcoin is digital gold. So Ethereum and all these other new smart contract platforms that are powering Web3, if you're a long-term investor, have a bit of exposure to everything. You want to have some Bitcoin for the long term, but you also want to have some exposure to these kind of, higher risk, but, potentially maybe higher return chains. So an example of this, as we start to finish off the show, of course, would be Cardano. Cardano is now available, I believe, on the Dacxi exchange. So the ticker for the coin, of course, is ADA. So what is Cardano? Well, it's a more scalable, efficient alternative to Ethereum, another potential smart contract platform. Third generation blockchain, they talk about here, proof of stake, consensus, so more energy efficient. So again, it's just, the point being, Bitcoin is the least risky crypto asset. As you move further out on the risk curve, you see Ethereum, slightly further out again, Cardano, and then further out again, you're sort of, outside the top 10 crypto assets. You just get further along the risk scale. But, perhaps chains like Cardano could offer some good returns to your portfolio. So if you want to, put just a little percentage of your portfolio into Cardano, well, now you can on the Dacxi exchange. And I'm told that Dacxi are actually adding a number of other coins as well over the next few months. So I'm sure we'll talk about those as they pop up. But look, if you want to learn more about the thinking here and all about Cardano, this is on the Dacxi Medium page, and I believe there's a webinar here as well. Not going to play that today, but there's your old mate Ed and so on, talking about Dacxi Australia is the headline there, launching Cardano, but I'm sure maybe that's just, I don't know if that means that's just on Dacxi Australia. I should know this. Hey, don't take it for my word. Just look into it. I believe it's available on Dacxi worldwide, wherever you are. If not, now it will be very soon. All right, guys. That's pretty much it, really, for today's show. So hope you enjoyed that. Hope you finished your cup of coffee. That's us. We'll be back again next week on the Crypto Wealth Cafe, brought to you by Dacxi. Thanks, guys. Thanks for listening. Bye for now.